I'm excited to be speaking with Ryan Coon, the co-founder and CEO of Avail. And we're going to talk about rentals. We're going to talk about Renter Nation. We're going to talk about trends in the rental space, landlords, fractional ownership, and all of the innovations that are happening in that space.
This is Notorious POD, the podcast for the best informed people in the real estate industry. Rob Hahn is your host, and Notorious is where the real estate industry comes for real talk with no bullshit.
Hey everybody, welcome to an episode of the Notorious POD. Obviously, this is your host, Rob Hahn. Really glad to have you here joining us, because I've got a pretty special guest. We're going to talk about Renter Nation. We're going to talk about rentals and kind of what's happening in that space. I'm pretty excited about it. So let's bring him on without further ado, Mr. Ryan Coon. How are you, Ryan?
Hey, Rob, I'm great. Thanks for having me today.
Yeah, and I forgot to introduce you briefly as the co-founder and CEO of Avail. Since I don't know if, how many people in the audience know about you or know about Avail, give us a little, 3 minutes. What is Avail? What do you guys do?
Yeah, for sure. So if I look at the market, at the US residential rental market, there's about 45 million residential rental properties. Half of them are institutionally owned and professionally managed. The other half of the rental properties here in the US are owned and managed really by men and women like us, individuals who have a full-time job and who are a part-time landlord. They're an individual mom and pop landlord. And what Avail does is really comes in and functions as their operating system. So for these independent, non-institutional landlords, Avail replaces the spreadsheets, pen and paper checks, brings all of that online so that for the landlord, they're much more organized and deliver a more professional, polished experience for the renters that live in those properties. So Avail got started about 8 years ago. Started here in Chicago. My co-founder and I wrote the first lines of code, but we raised a few rounds of venture capital. And then at the end of 2020, Avail was actually acquired by Realtor.com.
Oh, right on.
So we're now a part of Realtor.com. I spent most of the last year focusing on integration, but am now within Realtor leading the broader rentals category. So Avail is still a piece of that, but also thinking about the consumer experience and thinking about the large landlords. So a ton that we can talk about today.
All right, right on. And congratulations, by the way, on the exit. That's always an entrepreneur's dream. Before I dive into that, I always like to ask this question of prop tech entrepreneur type people, like what sins have you committed in your past that you ended up in our industry? How'd you end up in real estate? How did this come about for you?
Yeah, it was strange. I was actually back in 2012 working for a large global investment bank. I was putting in the crazy 100-hour a week, working on big M&A transactions for publicly traded companies, and then had become one of these independent landlords. And I saw firsthand my experience managing properties with spreadsheets and pen and paper. Had a unfortunate experience where, as a landlord, I was boarding a plane from Boston Logan coming back to Chicago for work, and I missed a text message from my renter that their air conditioner went out, and it was the middle of August. And if you know anything about Chicago in August, it's hot, it's sticky, and I just felt awful. And I started thinking there's got to be a better way to manage the rentals.
All right. So that actually makes perfect sense. So if I understand correctly, basically what you guys are is a property management platform for individual landlords, right? So a little bit like Appfolio, or one of these property management platforms for accidental landlords.
Exclusively for the individual mom and pop landlords. So today there's about 250,000 landlords that use Avail today. They manage properties in 20,000 zip codes. The average landlord has 1.8 doors or 1.8 units that they manage with us.
Okay. So you're obviously right on top of the whole Renter Nation trends. And one of the reasons why I wanted to speak with you was I think you contributed a section to Drew Meyer's, the GEM kind of predictions for 2022. And sort of talked about the linkage and how things were happening. So why don't we start with like, what did you predict, and do you still stand by those predictions? Let's go with that.
Yeah, Rob. So my initial prediction is really that we'll continue seeing convergence between consumer real estate and personal finance. And I really think that there's going to be this continuing push for those lines to be blurred, where you see things like shared ownership and shared those things. And then also beginning last year, a lot of us, ourselves and other companies in the space, we started reporting rent payments to the credit bureaus to help people build their credit score. And so thinking about real estate as a way both for buyers and renters, but it's really just another piece of individuals' overall personal portfolios, if you will.
Okay. So when you say personal portfolios, so you mean not just the landlords, you mean the buyer and the renter as well?
Yeah, I think that's right. I think for all of the consumers here in the US, I've got a set of kind of beliefs, which is I think home ownership and investing in real estate is great for many people. Other people, it doesn't make sense. And so I think for consumers, just broadly, I think the real estate will play a greater role in that personal finance, personal portfolio. And then ultimately kind of bring in the realtor, the broker to it. I think that realtor and broker will ultimately act as a sort of advisor, if you will, to how people think about real estate in their personal portfolios.
Okay. That was one of the things, right? You had mentioned that, potentially real estate and financial advisor kind of merge. Since you're from the finance world, does that mean they have to go get, certified and licensed and get their Series 7s and, some of the registered investment advisor type stuff? How do you see that working out?
Well, gosh, I think that realtors today already have to be licensed, right? They do undergo these courses on how to properly practice real estate. There probably will be some form of education that it becomes required. As someone who's gone through the Series 7 process and gotten that, I don't think that realtors will ever have to be Series 7 licensed. But I think that more and more these real estate individuals, professionals that are delivering advice have to be mindful of what's suitable for their clients. And that's really where I see things going.
Okay, well, I'm not going to dive into the rabbit hole on that just yet, but at a high level, let's talk about the rise of Renter Nation. Because this is something, at the pre-show we're chatting about a little bit. I'm kind of the opinion at this point, just given macroeconomic factors that's happening, I think we're pivoting away from a home ownership society to a renter society, Renter Nation, right? Hashtag Renter Nation, which then implies that we're also pivoting to a hashtag Landlord Nation. But the trends that I've been seeing is much more institutional participation in purchases of homes. You're obviously dealing with individual landlords. So obviously there are individuals and families who are interested in adding real estate as a, do you have any idea as to like which one is stronger right now? Do you think it's more the institutional guys, the hedge funds, the private equity guys that are more active, or is it more individuals, high net worth individuals, families that are more active in becoming investors?
Yeah, well, I think I agree with everything that you just said, Rob. Where I think as a nation, we are, I think, moving towards that hashtag Renter Nation. I think that consumers more and more appreciate the flexibility that comes with renting, the ability that they can maybe live in Chicago during our beautiful summers and pack up and move to Miami for the winter. I think that there's a lot of flexibility there. On the investor side, I think we're seeing increased investment from both ends, both on the institutional side and the individual. I know in a prior podcast you called out that I think institutions make up about 2% of the single family market.
Right.
And we're continuing to see that grow with Blackstone getting more and more into the space and other professionals, but individual landlords as well, where we just published our first quarter survey of our landlord base. And what we find is that about half of our 250,000 landlords are eager to continue growing their portfolios.
Okay.
They want to put more money to work here.
Okay. And are these guys the cash buyers that's killing the crap out of the first-time home buyers, the millennials and Gen Z?
Well, the individual landlords, I think, are not the ones that are all cash buyers. They're probably not the ones causing quite the dislocation that we've seen in the market.
Okay.
But
so the individual landlords are still getting mortgages. Maybe they're getting investor mortgage, whatever. They're not Blackstone coming in and say, okay, I want to buy 1,000 homes and just pay cash for it. That's what you're kind of saying. All right. Related question. Do you have any sense of how successful these individual landlords are then being compared to the institutional guys coming in with all cash? So here's the explanation. So yes, institutions are about 2%, right? But some of the more recent kind of sales records, again, this is all anecdotal because let's face it, no one's really collecting good data on this. Right. John Burns, I think, is one of the best at having any sort of data. And they're saying it might be, 20%, 25% nationwide of all purchases are being done in cash by institutions. Certain markets like Atlanta, some people speculate as high as 30, 35%. Certainly we know that there are, and that's not just the Blackstones. And I think that's one of the issues. Like people want to focus on the big Wall Street hedge funds. Like, look, there are a lot of family offices, like 10 million. And they're like, well, we don't want to buy treasury bonds anymore. So we're going to go buy 5 single family residential. We're going to buy an apartment building. We're going to buy a 4, unit, whatever. Like, do you have any data or any sort of sense of whether your individual landlords that are still having to go out and get a mortgage and invest in a property versus these sort of family funds, institutional investors coming and saying, hell, let's move out of equities, let's move out of bonds. Do you have any sense of who's winning, who's buying more?
Yeah, well, I think the first thing to call out, you're right, is there's no data, no great data out there. Maybe hashtag opportunity for someone to step in and fill that. But to the question around the performance and the success that individual landlords have versus the all cash buyers, I think on the financing side, right, these all cash buyers, what we see is that they're coming in, they're buying the properties for all cash, and then they're eventually selling off or they're taking debt, they're putting debt on those properties. So they are financing them in one or another. One of the big things that we see individuals do that's different is individual investors, by and large, do not value their own time, right? So these individual landlords, when it comes to things like repairs and maintenance, it comes to leasing and showing the property, oftentimes an independent DIY landlord, they're doing the work themselves. And so they're not having to take on that somewhere 10 to 15% of property management cost that the institutional investor would have. And so I think that kind of puts a check mark in the individual camp and says that they're maybe doing things better. What we also see that hurts the individual investor is that individual investors just do not raise the rents at the same rate that the institutional investor does. And so their yields are probably they're net, I'm guessing they're probably similar. Maybe with that all cash offer up front, the institutional guys are maybe getting the better deals. But that's, again, to your point, anecdotal.
Right. But the thing, again, the thing that I'm sort of wondering about, what I'm looking at is, and I've given some presentations with very little data, which sucks. I wish I had real data around this, is cap rates are compressing like across the board, right? Yes, rents are on the rise. 14, 15% a year, but home prices are on the rise 18, 19% a year. So, and to your point, individual landlords aren't raising rents, the way that professional sort of, those guys, the vultures, if you want to call them that, right, are doing. But what that means is I thought, okay, if cap rates are really compressing like this, we have a new kind of investor in the market because, the normal operating landlords have always been around, like forever, right? And they pay attention to things like cap rates. Like if I buy it at this price and then here's my expenses, here's my yield, like vacancy risk, all of that, like what makes sense. And they're not going to pay above that number, right? Because the deal just doesn't pencil. What I've been hearing more and more is brokers, on the ground, they're saying people are coming in and buying, like completely overpaying, all cash, and the numbers make no sense, right? And my answer was, look, maybe this is, like I said, institutions who are realizing we need to diversify. We don't want to have cash because that's depreciating at whatever, minimum 7.5% a year, right? Yeah. If you believe the nominal CPI, minimum 7.5%, probably closer to 15. So they're saying, screw it. It's not about getting yield. It's not about cap rate. It's just about parking this cash in an inflation hedge, and real estate makes a lot of sense. So they don't care about cap rates. Like, are we seeing anything like that happen? Because I would imagine individual landlords can't compete with that. Do you know what I mean?
Well, I think that's the story across the board, right? Is interest rates are at historic lows. The inflation that's occurring. The other thing that you didn't mention is the cost of materials and the cost of putting in that new air conditioner or the new garage door that's costing more if you can get it on the landlord side. And so I think there is this like overarching question around where is the best place for my money? Because I can't just let it sit in cash. We do see that individual investors are thinking about that. Again, I'll go back to our survey of landlords that we released last week, and they are saying, "Look, I want to have exposure to real estate in my again back to my personal portfolio." Thinking about it that way.
Interesting. Okay. All right. So switching gears a little bit, since you're in the prop tech space, right? For the rental space, right? What do you see as like the biggest opportunity, and what do you see as the biggest barrier? Because I have my thoughts on this, and this is where I want to get into a rabbit hole. But before I did, I would kind of want to get your take on it.
Yeah. So I think, again, going back to guiding first principles, one of my views is that the commission opportunity on a per consumer basis over their lifetime is huge, right? Statistically, as a home buyer, as a consumer, I may live in 7 or 8 different homes throughout my life. And each of those is a commission event. And one of the things that I've experienced even firsthand is that the agent and broker community really views each of those transactions as a one-time occurrence, and to date hasn't done a great job maintaining that lifetime relationship with me as a consumer. And so the way that relates to my business today is that we're thinking about how do you establish that relationship with the consumer as a renter, and then help guide that consumer through their journey really over that 50-year lifetime. So thinking about them and how do I help them get into that first home, and then maybe start helping them progress into a larger and larger home, maybe then diversify and invest in rental properties. That's really where I see the big opportunity.
Okay, so in order to do that, though, you have to have this, I don't know what to call it, you have to have information on this person, on the buyer, as they move through life. Now, this is interesting to me because I went to a property management conference and I presented and I said, listen, one of the opportunities I saw was something I've been calling the housing life cycle, right? Which is the idea that, you don't start off like you graduate from college, and you're 22, you just got your first job. You're probably not buying a house and becoming a landlord. You know what I mean? You're renting, you're a renter first, and maybe right out the gate you're renting some piece of shit, with 2 other roommates, right? And then after a couple of years, you made a little bit more money, you rent your own place, you meet somebody, you get married, whatever, you rent another place, and then eventually you go, okay, hey, you know what? Let's buy a house. Now you're a buyer, and then you're gonna buy the next house, and at some point you're 50 and you're like, I have some money, or you're younger, but you're a hedge fund manager, so you have a bunch of money. Hey, we don't need to sell our whole house or our condo. Let's rent that out, and then we'll buy our house in the suburbs, and now you're an accidental landlord, right? So I said, there's this whole life journey.
Yep.
Okay. No one right now captures that data on the person, right? So property management, one of my criticisms of that whole movement, not even criticism, it's more of a suggestion, is you think of yourselves as property management. So of course you're concerned about the property, right? So when I look at systems like AppFolio or even Yardi or some of these sort of commercial grade property management systems, they have all sorts of information about the property. They don't have a whole lot about the tenant, right? All they know about the tenant is this guy pays rent. Okay, you've just laid this thing out. Tell me, are you guys capturing that as Avail, where it's about the person, it's about the tenant, it's about the renter? If you are, how are you doing that?
Yeah, well, I think one maybe point that I'd make, Rob, is I think AppFolio and Yardi and all the other property management systems that are out there, they do have a lot of this data. They're sitting on this gold mine of data where they could monetize it, or could think about not even just monetizing, forget that. They could do a better job helping the consumer. And so with Avail, a couple of the things that we're doing is looking at even when an individual applies for the property. Mm-hmm. Think about going through, if you've ever rented a place and you have to fill out this application, scribble down a lot of sensitive information. Where do you work? How much money do you make? Where have you lived in the past? Yeah. What's your other employment history? What's your credit score? What's your criminal background? Like all of these different really interesting data points. And then what you can do is you can start to build that profile of the individual, and you can say, okay, they're moving into 123 Main Street. They're paying $1,200 a month in rent, and I know that their lease expires in 12 months.
Yep.
Then you can start saying, okay, maybe, and if you've got a connection with their bank account because you're processing their payments, you can also start to look at other transactions that are happening. You can maybe see that their income increases. And you can start to recognize that, hey, this person with a 700 credit score is making their payments on time every month, and they maybe got a raise in their job. Maybe that's the right time to start prompting that individual and saying, look, you're paying $1,200 a month in rent. If you were to buy, you could, save yourself maybe the current mortgage with interest rates and everything.
Sure.
You could calculate what a mortgage payment would look like and say it's $1,000, and then you layer on tax benefits and all that.
Sure.
So you could help that consumer.
And who's doing that today? Is that the real estate agent? Who is that?
No one's doing a great job of it today, is the truth. And I agree with the advice or the suggestion that you were given to the property managers. I think there's probably 3 potential groups that could do it.
Okay.
Number one is, I think technology companies like Avail sit at an interesting place to fulfill that goal.
Okay.
Number two, I think the property managers could also do it. And I've talked with a couple, I think there's a community out in Arizona where they've partnered, it's an apartment community, but they've partnered with local real estate agents who can start promoting home purchase options to the residents, and then they'll participate in the upside. And then number 3 is, I think the real estate agents could be doing more of that themselves.
Okay. And then presumably you guys as Avail/Realtor.com would help facilitate all that and figure out some revenue model, referrals and so on and so forth. Okay. That sort of makes sense. I guess the follow-up question is, okay, one of the interesting things that you guys do at Avail is that you're reporting these rent payments to credit bureaus. I've heard from a number of friends that the credit bureaus suck ass.
That's too polite.
Okay, well, so I guess a question there is why are we doing that instead of trying to create something new and different that captures more accurately, the creditworthiness of a particular individual?
Yeah, that's a great question. And I think there are certain things that we can change and certain things that we cannot.
Okay.
And unfortunately, I think that in the US today, if you want to get a mortgage and eventually buy a home, the mortgage companies and the lenders, ultimately driven by Fannie Freddie, still rely on the main three credit bureaus here in the US. And so I think our approach has been, look, that's a battle that maybe someone should and will win, but let's focus on what we can control, which is for the 1/3 of Americans that rent their home. Let's make it really easy for those individuals to have their on-time payments reported back to the bureaus.
Gotcha. Okay. And that's presumably something, is that something the tenant has to agree to, or do you just do it automatically, or how does that work?
Yeah, we have an opt-out process so that individuals they're automatically enrolled in it. But if for some reason they don't want Big Brother to have all of their data, then they can opt out of it.
Okay. All right, cool. I suppose, the final question is like, why don't we have a national platform for doing this? In other words, you guys have this data. To your point, Yardi, Appfolio, Zillow, all these have a lot of this data. Y'all don't share at all, right?
We don't today. Unfortunately, that's one of the challenges and maybe opportunities of the US market is it is massively fragmented. If we just look at the 1/2 of the market that's owned by individuals like us, there's 8 million individual landlords.
Yeah.
And they're all scattered out there. They're all, you can't go in the yellow pages and find them.
But you're realtor.com now, so there's Zillow, there's CoStar, there's apartments.com, there's all these, property management platforms. Like, is that you guys are all just competing with each other and trying to become that one? Or can you see a scenario where you all collaborate and say, listen, let's just come together and create some national database of some kind? Is that a possibility? Or is that just like, come on, it's politically and economically impossible? Do you know what I mean?
Yeah, well, I think that last point that politically possible is a big question mark right now with antitrust issues and all of those things. I think practically speaking, though, let's put the consumer at the center. I do think there's a lot of benefits to it. There's a lot of great things that could come from having one standardized set of processes and procedures, and that's just on the consumer data side. Not even to mention like lease agreements and the leasing ordinances. Sitting here in downtown Chicago, I go 20 miles north, and they've got the city up there in Evanston. They've got a completely different set of rules. It's like bonkers.
Yeah. All right. Let me ask your opinion on one other topic, and then probably wrap because taking valuable time. But so I don't know if you've seen, but I've been predicting, or I've been worried for a while about regulation and potential legislation, right? Because I think housing is and will become a major political issue, in the United States in the next 3 to 4 years, right? Because millennial home ownership rate is below 40% right now. And I don't think Gen Z is going to do any better, right? And right now, the rhetoric on Congress, so, I talked about the Senate hearing that just went down, and boy, all the senators are real mad at these institutions, Wall Street, landlords, et cetera. The problem is they can't really craft legislation just to go after BlackRock or Blackstone, right? That's not going to solve the problem because those guys are 2%. They have to craft something that goes after the 98%, which are individual landlords, small scale, mid-sized landlords. My concern, obviously, they do something stupid, right? When Congress and politicians typically do stupid shit, and as far as I know, there's no like lobbying organization. There's no group that represents landlords or that represents, those guys as a collective group and say, look, we get it. Like, we get it. We're trying to make things more affordable. We're trying to solve housing, but there's smart ways of doing it, dumb ways of doing it. What are you concerned about in terms of like some of this regulatory sort of legislative type things that are kind of on the horizon? And again, that's at the national level. You're in Chicago, it's much easier for a local municipality to say, that's it, rent control, right? Or that's it, whatever. We're going to make it really hard for investors to buy homes or other, like what concerns you about sort of the regulatory environment right now?
Gosh, Rob, we could probably do a podcast just on
we
this.
Should.
Talk
we should have a conference on this thing is what we should do.
Yeah. Yeah, I know. Drew's got his work groups on different things like affordable and I know you led the conversation on crypto.
Yeah.
And so we should do one just on that.
Yeah.
Within the regulatory environment, I agree with you. I think there's a lot to be concerned about. I think a lot of people focus in on affordability of housing, right? And it is a problem. It is a challenge where both home prices are rising, interest rates are rising, rent prices are rising. I think the narrative that is not out there is that individual landlords, by and large, are not, despite popular belief, we are not killing it. We're not driving Lamborghinis. I think of my co-founder Lawrence. He provides housing. He's built up his portfolio where he's got 15, 20 rental units. He's still just barely breaking even on them, and that's in a good month. And so I think about individual landlords do need a seat at the table. With Avail, one of the things that we're really active in trying to do is become that voice and that mouthpiece for the individual landlords. We actively talk with folks at the White House and different senators' offices, really trying to promote and encourage that individual local ownership of rental properties is a good thing. Now, I think there's obviously different things that need to be in place to protect the renter, but there's a lot. Rob, you brought up rent control. That's a whole topic that has a lot of different incentives. And
it's the worst thing in the world.
It's unbelievable.
You'll find most economists, even, it doesn't matter, across the political spectrum, it's like, look, short of a neutron bomb, rent control is the best way to kill a city. I spent a lot of my years in New York City, so I know exactly how that goes. And yet, it's politically the easiest thing to do, right?
It is, but people aren't looking at the long-term consequences, and that it deters landlords from maintaining their properties.
Of course.
Right? Because if I've got a property with rent control and I want to get the renter out so that I can increase the rent at that turnover event, the easiest way to do that is not fix stuff. And that's terrible for everyone.
So from that standpoint, what do you make of these sort of rent to own type models that are starting to really flourish out there, right? Like Divvy, there are a bunch of them I can't come up with off the top of my head, but do you think that's a possibility for sort of the individual landlords, the smaller landlords?
Oh, interesting. Are you saying a way for an individual landlord to get into a property is through a rent?
Right. No, what I mean, so you can say, okay, I'm going to start converting some of the rental payments into equity in the home. Do you know what I mean? So that my tenant could eventually buy my unit. Yeah. Can you see something like that happening?
Yeah, I think a lot of the alternative financing, whether it's that rent to own model, whether it's a Divvy, a Landis, a Home Partners of America, or some of the power buyer products that are out there, it's a really interesting space. And I like it because it just gives consumers that many more options.
Yeah.
Now, I think we need to be really careful and protective and selective about the messaging that's being put in front of consumers to make sure that they're getting into a situation where they're set up for success.
Right.
Because I think that's long been the challenge with that rent to own model, is that you're effectively handcuffed into this and you just continue paying, but you're not truly building equity.
Right.
I think those three companies that I mentioned have done a tremendous job of iterating and evolving that and changing that perception, but it's still out there.
Right. No, I'm literally wondering, as an individual landlord, right? Like, let's say you own 3 units, but you own a free and clear. Or maybe you don't own free and clear. Maybe it's got a lien on it. You have a mortgage on it. You have a tenant, maybe could those individuals start exploring, you know what? Instead of $1,200 a month, it's going to be $1,300 a month, but I'm going to give you $100 or $200, as equity in this unit. I don't know. I mean, I'm just thinking out loud here. We have to model it out and study it and, do all that. But it's just an interesting notion, especially for individuals, to explore. Not just, don't let this just be something for Divvy and Home Partners of America and these big funds, right? I mean, why couldn't, to your point, if it really is sort of personal finance related, why couldn't let's say I own a rental property, why couldn't I do the math and say, you know what, it makes sense if I find a great tenant, maybe I could offer him this option kind of thing. Do you know what I mean?
Yeah. That's actually a interesting idea and opportunity. I mean, with Avail, I imagine so let's start. I do know that some individual landlords offer rent to own type programs with their properties.
Right.
But there's not this standardized process for DIY independent landlords to do that.
Right.
And so
there we go. If Avail were to come
out
there we go. We're doing product design and ideation right now.
Right now, yeah.
Live on a podcast. I mean, yeah, something like that could be a really interesting opportunity for somebody, like an Avail. And you guys are realtor.com. You have access to all sorts of capital and resources, that might be fun to do, so.
Yeah, and it'd benefit the consumer.
It would benefit the consumer, and I think it would benefit both, right? It would benefit the landlord, it would benefit the tenant, and it would potentially ease this sort of housing affordability thing. Because as an industry, man, this has been my whole thing. As the real estate industry overall, if we're not thinking about this, I'm like, look, the politicians are going to politic. That's what they do, right? And there's enough anger, enough pissed off young people out there saying, I could never buy a home. The American dream is dead for me. They are going to do something, you know what I mean? And it's going to suck. So we need to think about this. We need to start taking steps and not just go lobbying. Obviously, that's important. But I feel like we as an industry need to start taking this seriously and coming up with some solutions for it. Otherwise,
get ahead of it. Yeah. Be proactive rather than reactive.
Exactly. That's why I'm so passionate about this, because it's not just the consumer. Of course it is. That's ultimately who we have to watch out for, but it's also this industry that we work in and we love, and I want to see it survive and, not just become some federalized, government agency. You know what I mean? So anyway, well, this is great. I know I've already taken up a bunch of time. If people want to find you, how would they get a hold of you, Ryan?
Yeah, so they can check out Avail at avail.co. Drop me an email at .co.
Avail.co. Okay.
We're new and innovative here in the 21st century. And so avail.co, or they can drop me an email if they want to connect with me. It's just Ryan, RYAN, at avail.co. So,
well, all right. Not on Instagram, not on TikTok just yet, or
not yet. Got to focus on building the business, and social is we're on social at Hello Avail, but yeah,
there we go.
That's a company thing. So
right on. Hey, once again, thank you, Ryan, and thanks everybody for listening. Like I said, I think we're dealing with a pivot point. And it's going to be companies like Avail. It's going to be people like Ryan. It's going to be other innovators that are going to come up, I think, with some sort of solution for this pivot away from home ownership society to renter nation. And hopefully we could swing back at some point, and go back to home ownership society, because I would love for the 22-year-olds of today to feel like one day I can own a home and I can raise a family. It's such a huge benefit. We just have to somehow make that possible and feasible for them. So thanks, everybody.
Thanks, Rob.